Kim, very good to see you. Today we get to talk about the one move that could add years to your retirement nest egg. Let's address the number one fear of most retirees, running out of money. So one way to make your nest egg last longer, figure out how to keep all of it in your pocket as opposed to sharing it with the government. So take a look at this headline from the Wall Street Journal. How can converting your tax deferred accounts to Roth accounts add years to your retirement nest egg?
Yes, so conversions have definitely been a hot button topic over the last several years. For those that have these nice big nest eggs, but all of them are IRA monies, what we always say is that that's good on paper, but you have to understand that not all that money is yours. So when you go to pull that money out, it's going to be taxed at whatever rate you're at. So what we've been doing a lot for clients is doing Roth conversions, especially in the tax environment that we're in right now. Taxes are at historical lows. So doing some smaller, a lot of time conversions over time to kind of buy the government out of your pocket and create a tax-free nest egg can be a good thing, especially when you have those times where you need large sums of money. If we can pull that out of a tax-free account down the road, that can be much more favorable than pulling out a large chunk out of the IRAs, which then may cause you to pay more money in taxes.
Makes sense. I'm glad you mentioned the fact that we are living in a historically low tax rate right now, which is part of the reason that Roth conversions saw a 44% jump in 2024. However, President-elect Trump has pledged to extend his 2017 tax cut. So should we still be considering a conversion?
Yes, we should still be looking at that every single year. Again, even though those tax rates are going to extend likely, if you look at it historically, we're still in very low tax rate environment. So for a lot of people, what that means is just maximizing the current bracket that they're already in and doing some smaller conversions over the course of time.
Okay. What are some risks or downsides to Roth conversions that people should keep in mind?
So number one, you want to know what your income level is now and what it may very well be going into the future. I've seen, unfortunately, some people kind of get on the Roth conversion train and convert too much money. They were in a higher tax bracket during their earning years. They did some large conversions and then they end up going into a lower tax bracket in retirement. And that can mean that they've ultimately paid more taxes than they needed to. So that's number one. Look at where your income is going to be both now and later. Another thing that should be looked at is making sure that you are aware if you're going to exceed IRMA limits. That's when they start charging you more for Medicare Part B and Part D. So a lot of times when we're doing conversions, we're making sure that we're keeping those limits in line as well.
Okay, a lot to consider, but as you mentioned, now is the time to at least crunch the numbers to see if it's worth it for you. So Kim, if somebody would like to do the math with you, what's the best way to reach you?
Yeah, the best way is just to go out to our website. You're going to find all of our contact information out there, www.young-wm.com.
All right, perfect. Kim, thank you so much for your time today. I really appreciate it.
Thanks, Erin.